For a decade, sneakers were a better investment than your 401k. Jordans were selling like tech stocks, kids were flipping Yeezys from their bedrooms, and resale platforms were bragging that a pair of shoes could outperform gold. Nike wasn't just a brand, it was the central bank of hype. And then, almost quietly, the music stopped. Lines outside stores disappeared. Sold out in 2 seconds turned into 30% off, extra 20% at checkout. That $400 Jordan on StockX, now sitting at $190 begging for bids. This isn't just a story about sneakerheads growing up. It's the story of how Nike turned its greatest strength into a slow-motion collapse and accidentally broke the entire sneaker economy on the way down. To understand what went wrong, you have to remember just how crazy the high point was. From around 2013 to 2021, the modern sneaker game exploded. Limited Jordan 1s, Yeezys, Off-White collabs, everything felt scarce, everything felt like an asset. Sneaker YouTube channels were posting how I made $10,000 flipping shoes this month. Resale sites branded themselves as stock markets of things. You didn't just buy shoes to wear them, you bought them to park money in them. Every Saturday felt like a mini IPO. Wake up, enter the sneakers app, take an L, complain on Twitter, then watch the price jump the second pairs hit the secondary market. If you did hit, you could triple your money overnight. It felt like free cash, and Nike was the one printing it. Nike understood the psychology perfectly. Limitation plus story equals obsession. The Jordan brand leaned into nostalgia. Every retro colorway came with a memory. The shot, the dunk contest, the last dance. Nike's marketing made you feel like you weren't just buying rubber and leather. You were buying pieces of history. On the performance side, shoes like the Vaporfly and Alphafly bent the rules of running, getting banned or restricted and then becoming must-haves. On the culture side, collaborations turned sneakers into status symbols. Travis Scott, Off-White, Seikai, Fragment, Union, Panda. Retail prices crept up, but the secondary market made that feel irrelevant. If everything you bought doubled in value, who cared if retail was $200 instead of $150? Then the pandemic hit and poured gasoline on the fire. People were stuck at home with stimulus checks, phones in their hands, and not much else to do. StockX, GOAT, eBay authenticity programs, all of them blew up. Boxes showed up at your door. You flipped half of them and called it investing. Limited drops sold out in seconds, and screenshots of insane resale prices spread like propaganda. Sneakers weren't just hobbies, they were financial instruments with shoelaces. Here's the catch. Hype only works when supply, demand, and mystery are in balance. And that balance is exactly what Nike broke. On paper, Nike was a winner in this era. Revenue was high, the brand was everywhere, and their biggest problem appeared to be too much demand. But inside that success was a dangerous temptation. If every limited drop sells out instantly, why not make more? Why not bring the heat to a wider audience? Why not turn rare Jordans and Dunks into everyday product? That's exactly what started happening. Dunks, which used to be niche and special, suddenly came in dozens and dozens of colorways a year. Jordan 1 started releasing in so many variations that collectors stopped even trying to keep up. The thing that made these shoes valuable, scarcity, quietly started to melt. And at the same time, Nike was making another big strategic shift, cutting out the middleman. For years, Nike told Wall Street its future was direct to consumer. Translation: fewer shoes going through Foot Locker and small boutiques, more shoes sold directly through Nike stores, Nike.com, and the sneakers app. On a spreadsheet, this looked brilliant. Why share profits with retailers when you can keep the full margin yourself? Why fight for shelf space when you can control the entire experience? Nike started reducing allocations to smaller sneaker shops, trimming wholesale relationships, and pushing more volume into its own channels. But here's the issue. Those middlemen weren't just stores. They were hype builders. They were community hubs. They were the reason lineups existed. Why launch days felt like events. Why people cared about the shoes beyond the box. When Nike starved them of product, the machine that had promoted and curated sneaker culture for decades started to die. Nike got more margins and less magic. At the same time, the macro environment changed. Interest rates went up, free money dried up. People had to think about rent, groceries, and gas before buying their third pair of Jordans this month. Suddenly, a $220 GR Jordan 4 didn't look like a safe bet anymore. It looked like a liability. Resale prices started slipping. Shoes that used to instantly flip for 2 times retail now sat around retail or under. The sneakers are an investment narrative cracked. A lot of casual resellers quietly left the game the moment the easy profit disappeared. This is where Nike's strategy came back to bite them. They had ramped up production to chase short-term revenue during the hype cycle. They had trained Wall Street to expect constant growth. They had flooded the market with more and more models, more and more colorways, higher and higher prices, and they ended up in the worst possible spot: too much supply chasing shrinking demand. What happens when you have too many shoes and not enough buyers? Discounts, outlets, sale walls, those members-only launches that once felt exclusive suddenly come back 2 months later with 25% off. Pairs that would have felt like trophy pieces in 2016 now get cleared out at Ross or Marshall's. Once consumers see that, they stop believing in the limited story. Why pay full price on launch day if the same shoe might be sitting in an outlet 6 weeks later? At the same time, competition caught up. Adidas recovered from the Yeezy fiasco with terrace shoes like the Samba and Special that took over Instagram. New Balance went from dad shoes to fashion staples with the 550, 990, 2002R, and high-profile collaborations. On and Hoka ate into Nike's running dominance with max comfort performance models that actually felt new. Even Lululemon stepped into the performance shoe lane. For the first time in a long time, the default assumption, sneaker equals Nike, stopped being automatic. And Nike's product quality didn't help its case. Collectors started complaining more about glue stains, inconsistent leather, rushed construction, and stiff fits. Prices climbed, but sometimes the shoe in hand didn't feel like a $200 object. When you're paying premium prices and getting outlet quality, it doesn't take many disappointments before you slow down. In a market this crowded, mid is fatal. The resale crash just made everything obvious. Think about the psychology of a hype market. As long as you believe someone else will pay more later, you're willing to overpay today. It's the greater fool theory with shoeboxes. But once enough people get burned, once they buy a pair for $300 and watch it sink to $180, they stop playing. They stop entering every raffle. They stop impulse buying on release day. Volume goes down. And that volume was exactly what Nike had built its machine around. On the ground, sneaker culture changed. Release calendars became exhausting instead of exciting. Instead of 1 or 2 big drops a month, you had something almost every week, sometimes multiple launches in a week. Hype wasn't special anymore. It was scheduled. The paradox is that the more Nike tried to manufacture constant hype, the less hype people felt. You can't make event drops feel special when everything is an event. At the same time, the narrative around Nike's brand shifted. For years, buying Nikes felt like buying into greatness. Jordan, Serena, Ronaldo, LeBron, Kobe. The stories were about excellence and outworking everyone else. Now, a lot of headlines were about something else. Overproduction, discounts, layoffs, inventory gluts, bland design, and chasing trends instead of setting them. When people start associating your logo with boring or cash grab instead of aspiration, you have a real problem. If that wasn't enough, Nike's relationship with its own core audience took a hit. When you make people lose money on your product long enough, they don't just stop buying, they start resenting you. Imagine being a kid who saved up to pay resale on a Travis Scott Jordan, thinking you're making a smart move because the last one shot to the moon, and then watching the price slide month after month. It's not rational to blame Nike, it's just a market. But humans aren't rational. They associate the brand with the sting. So is Nike actually dying? No, not in the sense of going out of business tomorrow. It's still a massive company with huge revenue, deep roots in sports, and global recognition almost nobody can match. But in the part of the business that defines culture, in the part that made kids line up in the cold and check sneakers at 10 a.m. like it was a sacred ritual, Nike is in trouble. The collapse is emotional before it's financial. An empire like Nike doesn't fall in 1 year, it erodes. First you lose the hardcore collectors, then you lose the resellers, then you lose the casual buyers who move to whatever feels fresher. At some point, your shoes are still on shelves and on feet, but your brand is no longer the center of the conversation. You become background. The biggest danger isn't that people hate Nike. The biggest danger is that they stop caring either way. You can already see the outlines of that shift. When a limited dunk drops and sits, when a GR Jordan 1 gets marked down, when social timelines start featuring more Adidas, New Balance, and smaller niche brands, when hype moves from shoes to other flexes, watches, cars, tech, travel, Nike loses the one thing you can't just buy back with ad spend: relevance. Could Nike fix this? Probably, but not with more colorways or more apps. To get out of this spiral, Nike would have to do the thing every publicly traded giant fears: slow down, reduce production, kill weak lines instead of milking them, bring back genuine scarcity and earn it with designs that feel new, not just remixed. Invest in quality again, not marketing language, actual materials and comfort. Rebuild relationships with the boutiques and local shops that make culture, not just revenue. And most importantly, let some shoes be for wearing, not for flipping, and others be truly special again. Nike would also have to accept lower short-term revenue in exchange for long-term heat. That's the exact opposite of what Wall Street rewards. It means being okay with missing a quarter today so that kids still care about your logo 10 years from now. That's a very hard decision to make when your compensation depends on next year's numbers, not on the culture in 2035. There's also the question of whether the sneaker market itself can ever go back to what it was. The boom years were a perfect storm: social media, resale apps, historically low interest rates, and a generation raised on flex culture. That mix might never fully return. Even if Nike gets its house in order, the days of every Jordan 1 rocketing in value may be gone for good, and maybe that's actually healthy. Maybe sneakers were never supposed to be hedge funds you tie on your feet. Here's the simple version. Nike didn't just ride the sneaker bubble, it helped inflate it, then tried to industrialize it. While the world was treating sneakers like stocks, Nike started treating them like fast food. Massive volume, repeatable formulas, the same thing served to everyone, everywhere. That works. Until people realize they've been eating the same burger for 10 years and start craving something different. The Great Sneaker Crash isn't just about a few bad releases or a couple of slow quarters. It's the bill for a decade of overproduction, overpricing, and overconfidence. It's a warning that even the biggest brand in the game can lose its edge if it confuses short-term hype with long-term love. So if you're watching this while scrolling resale prices, ask yourself, which pairs in your closet do you actually wear? And which ones were you just hoping someone else would pay more for later? That difference between love and speculation is where Nike used to live. Somewhere along the way, it moved out. The real question now is simple. Will Nike ever move back in, or is this just how empires end? Not with a bang, but with a quiet, endless sale section.